Good afternoon, and thanks very much for joining us for this CNBC Africa Economic Roundtable coming to you from Durban, Kwazulu-Natal. Joining me for a very interesting discussion, or what proves to be an interesting discussion, on balancing industrial relations and attracting investment are to my immediate right, Mr. Sithembiso Madlala. He is civil society representative. He's the convener for the Civil Society Caucus of the KwaZulu-Natal Economic Council. Mr. Moses Tembe, who is Organised Business, he's co-chair of the KwaZulu-Natal Growth Coalition and convener of the Business Caucus of the KwaZulu-Natal Economic Council. We are joined by the Honourable MEC Michael Mabuyakhulu, who is MEC for Economic Development, Tourism and Environmental Affairs, otherwise known as EDTIA. To his immediate right, Gina, who is representing Organised Labour. He is the Deputy Secretary General of the Clothing and Textile Workers Union, SADTU. Dr. Steven Friedman joins to his immediate right. He is a well-known academic, former trade unionist, journalist, and he directs the Centre for the Study of Democracy at both Rhodes University and the University of Johannesburg, UJ. Thank you very much for joining us. MEC, earlier in a discussion that we had just setting out KwaZulu-Natal's positioning in the broader South African context, we had the stat thrown forward that for the last decade, KwaZulu-Natal has grown at an average of 3.5% to 4%. The key now is, as we see South Africa as a whole continuing to struggle to meet economic growth forecasts, and here I must throw in the fact that we grew as a country by 1.3% annualized for the first quarter of 2015. KwaZulu-Natal's story looks very robust in comparison to the broader South African context. Would you agree with that opening statement?
Absolutely. Not only do we have the potential to do better, but we can say that on average, we normally always grow higher than the national average. And that actually indicates the potential that this province has. Not only are we the second biggest economy in terms of GDP contribution, but we also have quite a huge advantage in a number of areas. And one of those areas is that we are the second biggest industrial base of South Africa. And that to us clearly indicates that as social partners, we really do have a potential of converting this potential into a meaningful wealth that can actually help us to deal with the issues of unemployment, issues of poverty, and issues of inequality.
Moses, putting the workings of the economy center stage is a fundamental principle that you stand by. Can you unpack that a little for me, again, in the KZN context?
Yes, indeed. My MEC here has to be commended for spearheading that strong relationship between all social partners. And to that effect, we do have very structured meetings, and we engage each other quite in a robust fashion. But it must be said that in KZN, as an exception, we've always been clear that we need to create a very strong, dynamic, and balanced economy in KZN. And we have always been clear that whilst it is critical to create sustainable jobs, it is also key to build the capacity in the economy that can begin to absorb new jobs. And as KZN, we must also, we definitely are proud that we are working very hard now to integrate that KZN economy into the world economy. That is very key to us. And how do we intend achieving that? We believe that we need to create a very efficient domestic manufacturing capacity. We also believe that as KZN, we need to build that potential to export manufactured products.
Chris, how do we get labour to buy into the economic growth equation, given the history of where we have come from and the situation where many of those, in fact the majority of the workers within the KZN province and within the broader South African context are still earning weekly wages, monthly wages, and are not salaried employees, so to speak?
Thank you very much. It is just very simple. When you invest, we all appreciate that investment as society. Key component is that, of course, any investor, when he invests, he expects profit. That profit will come through by means of labor. The first key area to us is that you got to train, develop skills. We're coming from a culture of what you call semi-skills. Develop skills in such a way that you produce a workforce that is multi-skilled. A workforce that, even if it means that there are times of redundancies, but that workforce can actually be able to stand alone and say, let us form our co-op because we got expertise that we have developed in an X company. It is important that big companies, when they train, when they develop that product of expertise that is able to stand alone to say, I can open my workshop, electronic workshop in my particular yard. But those expertise were born through intensive training which was developed by that employee when he was working to that particular company, which is in that particular part of the province. That's the key area. The second area is the component that you don't rely on what you call wages and salaries, but you must also recognize the input that your employees are putting, develop productivity that comes with incentives. The South African workforce can compete with any person in the world. We can compete with any country. Our workforce, our quality standard for the product is of a very high quality. But if we can develop, incentivize, that is coupled to wages, to me, that is a very fundamental point.
Stephen, how does South African labour compare to international standards when it comes to a labour force?
Well, I'm not sure on what criteria.
I'll tell you where I'm going with my question. So I'm going to go straight to productivity because we are part of a global stage. We are vying with other emerging markets for foreign direct investment. The Honourable MEC made mention earlier of the $7.4 billion that South Africa has attracted, followed by Nigeria of $7.3 billion. MEC, was this for the 2014 period? 2014 period. So I'm talking about investors have choice. There are a number of red flags that have been highlighted by the international investment community. And one of the criteria that we are judged on is labour flexibility. According to the World Economic Forum's report, we rank pretty close to the bottom on labour flexibility and also on labour relations between workers and employees. This is a metric that international investors will look to and say, if I invest my money in South Africa, does the risk outweigh the reward?
It's a metric which some investors will look at. I think there's an awful lot of mythology about investors. I talk to investors a lot, and any connection between real investors and the ones you hear about in these sorts of discussions is purely mythical. The question of competitiveness, the question of productivity, if you read your standard industrial sociology textbook, you will learn that productivity is a management function. It's got nothing to do with whether workers work hard hard or not. It has got to do with the ratio between the number of people you employ and what you produce. And productivity can be achieved by cutting the workforce, or productivity can be achieved by being smarter, but whether productivity is achieved or not is a management function. So if we have a productivity problem, it is because we have still inherited, and that is the major problem in our economy, whether you look at business, whether you look at labor, we are still operating the kind of economy we operated before 1994. It simply has some new actors in it. And that is the problem. That is not a Labour problem. That is a problem with the entire economy.
I made mention of our past and the fact that we are working hard.
You see, this is the problem, because what tends to happen, I mean, a couple of years ago, the then governor of the Reserve Bank, I think made a very important speech in which she analysed all of the problems we're talking about. And the next day, in all the media, the reportage said the minister of the governor of the Reserve Bank yesterday said, in effect, that workers are lazy and government's no good, which is not at all what she said. She said we have a whole series of inherited problems which have to do with the way in which we relate to each other, the way in which we run the economy, and until we fix those problems, we're not going to get out of this. We can't deal with those problems by simply blaming Labour, by simply blaming
Dr. Friedman,
government, or any of the other economic
I'm
actors.
feeling a little animosity towards the media here, sir.
No.
I'm happy
lots
to
of
engage.
animosity.
I'm happy to engage in robust debate, and that's exactly why we have your opinion,
Yeah.
and an absolutely valid one. I just have indicated that there are investors out there. We've got the World Economic Forum upon us in just 2 days. It starts on the 3rd of June, where one of the issues that we're going to ask repeatedly of our senior politicians and our senior business leaders is the issue of productivity. So it may be completely the wrong grounding for a debate, but it is an issue that is brought up in public forums on a regular basis. But you have put that to rest, so let's move on.
No, I put it to rest. I've given you another view.
Thank you. Sithembiso, let's get you to enter into the equation here.
Yeah, I think the critical point that Professor Friedman is raising is the types and the kinds of investors that we would like to attract. There are those who are interested really in just investing, whether there is stability or no stability. That's a reality of the matter. They're interested in just generating profits. So it is very critical and important to say what kind of investors are we talking about? From which countries are we talking about? Are we not attracting investors who will continue with the exploitation of the workers, who will take money from the Johannesburg Stock Exchange and invest it in the New York Stock Exchange and other countries. So it's very critical to understand what kind of investors. We need investors who will be interested also in our social programs, in the implementation of a national development plan, in also ensuring that the economy grow in an inclusive manner. Those are the kinds of investors we should be talking about.
MEC, you're coming in here.
Well, I think one of the things in any dialogue that will be important for me is that, first and foremost, as a country, we should allow ourselves to have an introspection. When we are dealing with the issues around where we are being ranked, for instance, the question that is important for us as South Africans is to begin to look at what can we do and do differently and do it better. If we're to dealing with the issues of productivity, the issues of investments, what makes us a very unique destination is that we do have labor market stability. We have provided, for instance, the laws that protect both employers and employees. In that regard, we have opened up a space for collective bargaining, the point raised by Dr. Friedman. And the point that we all would concur with, that in a better industrial relations environment is where you therefore have got an equal footing, and therefore that you can bargain, and therefore you can but you can also deal with issues of production efficiencies. Because if we were not to do that, I think as a country we would find ourselves lagging behind. Now, I want to argue the point that for now, whether the investor comes from country A of origin or country B or C, it shouldn't matter, because when we come into South African markets, labor markets, there are laws that would simply say we do not allow exploitative conditions of labor. At the same time, we want to have a win-win. And therefore, where we are stiffly competing for the attraction of your foreign direct investments across the globe, where your major beneficiaries in this regard are countries such as the USA and China. We want to become competitive with South Africa. And from the point of view of government, whilst we would encourage foreign direct investment, we also encourage expansionary growth. So that we therefore are saying to those who are actually already investing in this economy can expand their factories, they can actually grow, but it can only happen when all of us have a win-win. Our posture is for a win-win.
Moses, I'd like you to build on what both the MEC has stated and also what Sithembiso referred to. And Sithembiso, you made reference to the fact that we only want to attract a certain type of investor, an investor that has a strong socio-economic base to that investment decision. I'm going to say to you, Moses, do we have the luxury to be picky about our investors?
It must be said, really, for starters, that apartheid legacy is going to be with us for a long time. It will take a few decades to address apartheid legacy. The big question for us as a nation, how do we rise above what was created by that regime whilst addressing those issues? You don't want to park it aside, Professor, but the big question is, what do we do as a nation to rise above that? And central to that question, as a businessman, I'm saying, what is it that we do to create an environment that is conducive to economic growth? That's Professor. But coming to my colleague here, Sithembiso, from representing the civil society, you can't pick and choose investors. We certainly don't have that luxury. I can tell you now, Sithembiso, there will be investors who will lie about the return on investment. These guys are not philanthropists. I'm an entrepreneur myself. I always say I'm a capitalist with a conscience.
Can you unpack that?
Is that possible?
Yes, absolutely.
Is that possible?
Absolutely. But all of us, when you are investing, that's why you have a word investment. You want a return. So the fundamentals have to be in place that will make it possible for you to get return. The question that must arise, once you've put those fundamentals in place, what do you do to make the environment in which you operate in a sustainable environment? But the central question is, the environment has to be conducive to making that profit. And the second question, when it works, you begin to say, as a nation, what do we do now to begin to reverse all the issues that Professor was talking about and all of these issues? If you don't have the economic model that works, unfortunately, you might not even be able to address all the good things that we want to address as a nation.
Dr. Friedman, Moses has asked you the question, and that was how you rise above apartheid. I'm going to add to it in the global context, which is very demanding from a competitive investor standpoint.
Sorry, at the risk of being accused of targeting the media again, I think, it's very important to make a point about this global environment we hear a great deal about. And I want to make 2 points about this. The first one is this idea that we're all involved in a sort of war against each other for investment was actually demolished by a British economist 200 years ago, so I don't know why we stuck with it. There was a guy called David Ricardo who developed this theory of comparative advantage, which shows you that actually countries can cooperate in the international environment as well as competing. And this idea, I mean, Paul Krugman won a Nobel Prize for showing that it's incorrect in this environment, etc. So that means, from a South African perspective, you know, this idea that if we do X, Y, and Z, we're in trouble, and if we do A, B, and C, we're not in trouble, is simply not true. The one commonality, if people are looking...
Can I just ask you,
yeah.
why, should we not be asking about competitiveness in the global context?
No, we should be asking. You see, Bronwyn, there's another point which is relevant here. When you quote these surveys of international investor opinion, and what I'm about to say I can actually demonstrate with a great deal of information if we had the time. Okay, 98% of what you hear from international rankings comes from domestic business. Okay, in any society, it's not a criticism because it's common sense. If you're an international investor, you want to decide whether to invest in a country, who do you talk to? You talk to local business people if you're vaguely rational, and you pick up a lot of their sentiments. So what we have is a domestic sentiment problem. That doesn't mean that the business people who have those negative impressions are wrong. It simply means that we need to understand what the nature of our problem is. What we have is a whole lot of inherited divisions in the society, which mean that people are suspicious of each other and they don't get along with each other. And that is our central problem. And that would be my response to Moses, is to say we need to start addressing that problem. We also need to be a bit more realistic about what it is we're trying to achieve here. I think a lot of our debate in South Africa between the political parties, for example, Party X is promising 8 million jobs, Party B is promising 6 million jobs. All of this is based on a fantasy. It's based on the fantasy which says one day we're going to live in a country where the great white utopia of the mid-50s, in which every adult gets up in the morning and goes to a formal job, is going to happen here. And it's not going to happen here. And that doesn't mean it's a disaster. It simply means we have to deal with what really is going to happen.
MEC, why was it important for you to quote the number of foreign direct investment at the outset of this discussion? Why did you make reference to that $7.4 billion over 2014 going to South Africa? And then, sir, you stated that $7.3 billion went to Nigeria. If competitiveness wasn't a factor, why did you put a ranking 1 and 2? I'm just understanding whether you will weigh in with me on the fact that there is some merit in the debate on competing for investor capital.
Yes, I think one of the reasons, I think there are 7 countries. I just did not mention all of them. I mentioned only the 2 with the highest beneficiaries of FDI, which is South Africa is number 1 at 7.4 billion, followed by Nigeria at 7.3 billion. And then thereafter you have Ghana at about 4.4 billion, and Angola and many others.
But are we competing with one another for that capital?
If you were to look, yes, it is true that we would be competing with one another when we look for that. South Africa's economy is a highly diversified economy, and we're seeing that the bulk of that investment is taking place in a number of areas, a number of sectors of the economy. Whereas in the other countries, it tends to be driven solely and primarily by mineral resources. That is where you see the bulk of those investments taking place, with a portion of that goes towards the issues of infrastructure. Now, it is important for us that as a country where we have got a huge numbers of unemployment, and the recent statistics survey of the labor force survey that has been released, that is putting us at around about 36%, if we're talking about the expanded definition of unemployment, clearly indicates that as a province and as a country, we need then to begin to have a strategy to respond. You respond because the economy is growing. You respond because the economy is able to attract new investments. You respond because existing companies, there is expansionary growth that is taking place. Now, unless, therefore, we are able to compete at the same level, we will be lagging behind. And therefore, there is no ways, even in areas where we have seen employment taking place, where we've seen growth taking place, if you look at the ratio of employment that has been coming into those sectors, some of those sectors, the ratio of employment that's been taking place is not very great. So I think as government of the Republic, we are very clear that one of the things that we would need to do is to continuously be able to get a fair share of investment that is taking place. But of course, we're not solely dependent on foreign direct investment. We also mobilize domestic investments and expansionary growth. And hence the government itself is leading with regard to the whole issue of infrastructure, using the cyclical approach towards the economy. Now, I'm saying, therefore, for us seated where we're seated, our own argument is that we must create an investment market which, in comparative terms, when it is being compared with other investment destinations in the world, there shouldn't be issues that people say we have reasons to be able to shy away from this investment because the leadership there from the social partners is not paying particular attention to these issues. Of course, it is true what I think Steven is saying, that investors would always go to a country for other reasons. When China was still a communist country, you still see it going there. It's not an issue of democracy. It's an issue of people looking for certain benefits. However, I think we will be well advised to look at these issues and to take a position that says we have our own introspection, we therefore have our own agreement of how do we want to develop this economy. That is why the issue of a social accords and partnerships becomes crucial. It shouldn't happen as an accident. It should happen because all of us can sit together. We can then discuss issues and create a framework that is creating a win-win for all of us.
And have robust debates like we are today. Chris, I'm going to bring you in here. Let's look at solutions now for the second half of this discussion. Small businesses, and this comes back to the MEC's point of mobilizing domestic resources. Small businesses could be that silver bullet to impacting the unemployment rate, which again the MEC referred to as broadly sitting at that 36%, all-encompassing. What is Labour's stance with regard to small businesses and allowing managers of those small businesses to easily and fairly employ labourers?
What we expect from small businesses, because we work with quite a high number of them in different sectors of the economy, is the first thing that you require from the small businesses is to not to duck the laws of the country. Because we have seen actually big companies closing down, breaking companies into pieces, but spreading them into small businesses so that they can actually duck the compliance and the laws of the country. So we would like to work with small businesses that respect the laws of the country. When they have problems, they follow the structure of the institutions. For example, we got institutions that are outlined by the Labour Relations Act. If you've got bargaining councils, if you've got a problem, bring your problem to the exemption, and the problem will be heard adequately, and the decision will be taken appropriately. The second area from the small businesses that we also expect them to do is to train, but not also to exploit their employees up to a point where you discover that a small business, the manner in which people are exploited are just worse than actually a medium business. We normally foresee a high level of exploitation of women in the small businesses because those women don't have tools to defend themselves. The high level of exploitation of labor, you normally find it actually in small businesses. That's the key area.
I want to bring Sithembiso in here. Is that a widely held view, that small businesses exploit workers?
That's a recent and continuing phenomenon. Previously we didn't have such a situation, but others come as investors, as small businesses, but only to find that because they know that there's a higher rate of unemployment in South Africa, they'll simply tell their workers, either you get this salary, you start from this time and end at this time of the day, or you are expelled. So that is an emerging phenomenon that we are dealing with now.
Moses, bring in organized businesses view to this discussion around small business.
I choose to take a high road view to the question. If you look at advanced economies, and I have no doubt that South Africa will become one in the very near future if we continue to work together as social partners, there is a relationship between the numeracy and literacy of labor and higher salaries. No doubt that as business, we have to ensure that to the extent that we can, working in in partnership with government and as partners, that we upskill our labor and ensure that training and skills development is really given the priority that it deserves. I think by doing that, you could begin to assume that the labor will be more productive and you'll be able to pay higher salaries.
Do you think
it's
a fair criticism of small businesses, specifically within KwaZulu-Natal, that they exploit workers? Is that a fair criticism, sir?
Look, not all small businesses exploit. I'm an employer of a few thousands of people in this province. We've debated as management what we think is a living wage and arrived at a figure much higher than what the Labour Department is prescribing, and we are getting return for our investment. So you really have to begin to develop that reservoir of a capitalist with a conscience who will begin to say, look, yes, it's good to make a 40-50% return, but you could live with a 20% return, and it works on the ground. It must also be said that hence one is happy that the civil society is here. We have to inculcate in our society that work ethic and culture, which unfortunately it's been debilitated in one way or the other. Many people are really not prepared to sweat, work harder in order to truly earn their buck.
Dr. Friedman, what do you make of that term, capitalist with a conscience?
I think it's nice. I think it's sweet, but I mean, obviously, I'm sure all capitalists have consciences. I don't think that's really what it's all about. I mean, it's nice that you have a conscience, but I mean, a lot of this discussion we're having, we live in an ordered society. These issues are regulated. It's not a question of Moses' large conscience and somebody else's small conscience. It's what do we expect, what obligations do we expect from people, and what rights do people enjoy? And at the risk of sounding horribly academic, I mean, part of the problem with the small business discussion is what do we actually mean by small business? And the reason I'm raising this is because, if you're talking about a firm which employs 25 people, which is what I think we're talking about, that is one form of small business, and we need a discussion.
Let's make that definitive. Let's say we are talking about
but we
company.
can't make, you see, the problem about making it definitive is then that you don't actually get to what interests me at the moment, which is why I'm making these points about, millions of people aren't going to be in formal employment. It's because small business, in my view, is also the person in the backyard of a township who's who's fixing cars, etc., etc., etc. And the question is, what are we doing about that? Because I don't think we are taking that seriously. I have people, we talk about there's no entrepreneurship in this country, and Moses, you say people don't work hard, etc. I have people from abroad coming to me and saying, but we go out to townships and it's full of people who are very entrepreneurial and who are showing a lot of energy, and why don't you ever talk about that? And I'm afraid, at the risk of offending people, I say because the people who drive the debate in this country are ashamed of those people because they are not in air-conditioned offices. And that, I'm afraid, is leading us down a blind alley. If you get up in the morning in a township and you earn a decent buck by fixing people's cars, you are a small business person.
I agree with you 100%, and we stand corrected.
And
we're talking about micro enterprises here,
but
which
we
you're
need to
referring
be ensuring that small business person in the township can actually participate fully in the economy. And at the risk of getting involved in provincial one-upmanship, etc., the Premier of Gauteng, in his last State of the Premier address, was, as far as I know, the first politician in this country to stand up and say, my provincial government is going to stimulate township industries. And I think that's vital.
Sithembiso, you've been waiting to MEC.
Let me
Okay.
Yes, absolutely. Absolutely.
I think let's try and dissect the discussion. We all know, even without the question of defining the question of small business on the basis of returns that people are able to make, you would say that generally speaking, what we have seen globally taking place is that we have seen businesses which are smaller in size, and that is all over the world. In Japan, almost 99% of the businesses, it's no longer conglomerate, no longer big corporates, it's now your small businesses. The same thing you would find that even in China, 94% of their businesses, it's not big business, corporate and all of that. Now, we therefore have coined a term that small business is big business. And that term actually begins to simply then realizes that within small businesses, you will have different levels and type of businesses, small businesses. And therefore, you can only actually define them about the gross turnover. What are they actually making in terms of those businesses, and put them at that level. However, in KwaZulu-Natal, the Prim of Gauteng may have been the first to speak, to be heard. We are the first one in terms of creating policy. As way back as in 2010, we therefore put forward an informal economy policy. And that informal economy policy determines how you begin to deal with people who are operating in an informal sector of the economy through their backyards, unregistered businesses, and all of those people. We have gone further. We have now established the KwaZulu-Natal Small Business Growth Enterprise. And that small business was established in 2011. It is now focusing as a one-stop shop that says, because we do have a suite of interventions that are geared towards supporting small businesses in general, but who then is hand-holding your informal sector of part or micro enterprise at the micros level? We now have put amount of money than people who want just to borrow money to assist those people. Now, he may have actually announced it, we may have announced it in KwaZulu-Natal, we may not have been heard because we are far from Gauteng, but the truth of the matter is that we really have actually been able to intervene. But I wanted also to come back and simply say that I think the issue when it comes to a generalization, to say, do all small businesses exploit? The point of departure is that, one, we want to make it easier to do business. Two, we want to ensure that we must reduce the unnecessary red and bureaucratic red tapes that may make it difficult for people to do business. But thirdly, we are not actually building an economy that is based on exploitative conditions. And by that, we must create a platform for people to negotiate. The state cannot become the big brother that must define everything. And I think the point was made very well by Dr. Friedman himself. He said, you bargain your way out because everybody must ask the question, what is it that I am prepared to take here, but what is it that I'm prepared to give? In a country where you have got huge levels of unemployment, how do we balance? And I think that is where the debate and the essence of the debate, how do you balance what we think ordinarily as a nation we would like to take from that which we should be giving? And I think the crust of the point which have actually characterized our discussion in the Economic Council is about understanding our roles and our responsibilities. What are we taking out? What are we giving? There is no way we can build a growing and a thriving economy that is responsive to the needs of the nation unless all of us are able to say, this is what we are prepared to take, but this is what we are prepared to give. I'm saying, if you are having a situation that we are having, we must then be able at some point, until we have reached a particular level of development, there are things we need to give. And I think we must then, all of us, be rational about what are those things that we need to give. And one of those things we need to give is it better for someone? That is where the point raised by Chris, which we fully agree, where you have got people that are part of a council, and there is a need for exemptions to be considered on merit of certain specific cases, rather than people closing factories and closing businesses. It's rather better for us to talk about the realities of the situation, where people are coming up with authentic information and say, here, based on this thing, we think we cannot afford. Can we be exempted? And therefore, we think there must be a reciprocal approach on both ends.
Give and take. Sithembiso.
Yeah, definitely. Concurring and reiterating on what the MEC said about small business, I think it's our cardinal mandate as the Economic Council to develop small businesses, because the reality is that the informal economy and small businesses is one of the fastest growing economic sectors in the world. So if we are to grow as a country, I think we should focus more on the informal economy and also small business development. But having said that, at the same time, we should not shy away from the fact that our economy at the moment is not yet transformed. So whoever invests in South Africa, the reality is that they should acknowledge the fact that we're in a state of transforming our economy. As Professor Friedman has said, that there are issues and economic issues that we never dealt with during our transformation as a country. And those things are coming back to haunt us as a country. So what is critical for us as civil society is that the informal economy is being recognized now in KZN. I think we are one of the leading provinces where you'll find that the municipalities have created spaces and policies and programs for the informal economy and also for small businesses. It's not that we are trying to romanticize this kind of partnerships that we have, but the reality of the matter is that there are some tensions. There are always tensions within us in the Economic Council. But the reality of the matter, we've been able to find the common ground amongst all other stakeholders to say our primary goal is to develop the economy of KZN, irrespective of ideologies.
Chris?
I would say, looking to international experience, our country and our province is standing a very good chance to turn things around. It is a question of all parties to sit together and listen to one another and be honest, not to undermine the laws of the country. Because I must say this, we cannot have a society that has adopted a culture of non-compliant. It's one of the things that in our country that we need to demobilize the non-compliance. For example, I'll say, I'm not going to pay tax. I'll make sure that I duck paying tax, which is the statutory requirement. I would say, I think this sharing of opinion, it says to us as an Economic Council, when we go back, we must reflect exactly as to what have we learned from this dialogue and what can we do going forward.
Dr. Friedman, I know you're going to be able to help me give a robust answer to those at the World Economic Forum this week that are hysterical about South Africa's growth rate coming in, as I said earlier, at that 1.3% for the first quarter annualized. And again, they are the ones who are going to say, but hang on, compare that to India, to China, to Brazil. Help me with these detractors.
Well, I mean, the problem is we don't live in India or China and Brazil. I mean, what you compare it to is your population growth rate. And if it's lower than your population growth rate, you've got a problem because we're not producing enough for the number of people in the society. Now, of course, a low growth rate is a problem, but that's not what we're talking about. We're talking about, and Moses's question there is entirely fair, what produces a higher growth rate? And my problem...
But aren't the two the same? So sorry, I mean...
No.
You know what I mean? We are talking about...
But the point is that, you know, the hysterical response says that we're going down the tubes because we have a low growth rate. You know, if countries went down the tubes because they had low growth rates, there would only be there would only be tubes, there'd be no countries.
So this doesn't concern you, the 1.3%?
Of course it concerns me, but it doesn't mean that, you know, all sorts of things concern me. It doesn't mean that I start tearing my hair out and wearing sackcloth and ashes, which is not a particularly rational response to the concern. The rational response to the concern is, what do we do about it? And the first step of what do we do about it is to say it's not the end of the world. Because if you think it's the end of the world, you're going to do nothing about it. There isn't terribly much you can do about the end of the world. world. So the first step is saying it's not the end of the world, there are things we can do about it. And what are the things we can do about it? We can recognize that there isn't one magic formula for every society on earth which produces growth, okay? If there was a magical formula, then we could introduce lifelong employment here. Okay, you don't like lifelong employment, it produced sustained growth in Japan for 40 years, okay? Or we could put workers on the board. You don't like it, it produced sustained growth in Germany for 30 years. My point is that it's not about formulas. What worked in Japan and Germany may not work here. What works here, and there I'm entirely on the same page as the MEC. What works is social actors getting together and thrashing it out and negotiating and making compromises. That will put us on a higher growth path.
So, MEC, as we draw to a conclusion, I'm not yet going to closing statements, but let's talk about that premise of giving and taking, exactly what we're doing right here with all these stakeholders, labour, government, business, civil society, debating economic priorities, looking at implementation, and more importantly, sir, measuring that implementation. Because if you cannot monitor, you cannot manage.
Yes.
So talk about the progress that the KZN Economic Council is making with this deliberation, with prioritizing economic issues.
Well, the first thing that I think we have decided to do as council first was to bite and bite in sizable chunks. What do I mean about this? We have actually taken the agreements that were reached in NADLAC, and the 6 of them. We began to look at which ones we think have got a much more immediate impact in us at a provincial level. Although there is no direct relationship between provinces and NADLAC as we speak right now, in terms of the law, but as social partners, we've all agreed that once the country has actually reached a particular consensus, it is important that we also are able to then begin to give effect to what has been agreed nationally. We've unpacked that. So we have decided then to simply say in Chapter 1 and Chapter 2, we have taken some of the things that we agreed there, but we have added in Chapter 2. We have actually brought in the issue around women's economic empowerment. We have brought in the issue of the maritime industry. Because we have said, where are KwaZulu-Natal's competitive and comparative advantages? In which sectors? What can we do together? If you look in each one of the 2 chapters, we've been very clear. We have actually identified what the public sector is responsible to do, its target and its commitments, and what we expect of the public sector, what we expect of organized labor, what we expect of business, what we expect of civil society. So each one of us, therefore, are holding each other to account, number one. But number 2, we have gone on to establish task teams. Now, these task teams, we are linking them with the action work groups that we have established under the provincial growth and development plans, where we now do have these work groups. And the work groups are then focusing in implementing all of the things that were agreed. So business is able to set up its own people who are specialists in those areas where we've agreed. The same thing for civil society, the same thing for labor, and the same thing for us in government. Now, I'm saying the model itself has been that we don't want to sit and therefore have a big agreement. So as we each agree on issues, we add that as a chapter. So we've taken an evolutionary approach towards ensuring that we are developing a social accord, which is indeed a living document focusing on the things that we should do and do them together. What we've avoided in the process was to go for issues where we think we may not have consensus, and we don't think it is wise to start and be stuck in the discussion on areas where we think you might be far apart from one another. However, we do not fear entering into a debate or a discussion on any matter, including this matter. And I want to, therefore, to simply say to all of those who are present that for us, the learning experience we have here, there is more that we are in agreement with than the things we disagree with. And I think if we focus on that, Africa is the next frontier for growth. And because Africa is the next frontier for growth, when Africans sit down and they are able to mold their own journey of how they are going to develop, and therefore others coming in to support them in their journey, we will have a better story to tell. in the next 30 to 40 years. And that story to tell begins from today.
Let's move to closing comments from our panelists. And Dr. Friedman, I'm going to start with you. Just going back to some of your opening statements, and in particular the statement that you made regarding the topic at hand, and that is balancing industrial relations and attracting investment. You very clearly said at the beginning, this is not the question that we should be asking.
No, look, before I do that, I just want to say that the point that the MEC has just made about what, the fancy term is incrementalism, no big bang approach, etc., that's absolutely crucial. Because I think that part of the problem we have in this country is that when you talk about negotiation, South Africans have this picture that everybody's going to gather in a venue like this for 2 days and they're going to sign a declaration and the problems are going to be solved. And it doesn't work like that, because if people are far apart, you don't settle the problems by talking for 2 days. You settle the problem by talking for 2 months or 2 years if you have to. The point that I was trying to make at the beginning is that one of the assets we have in this country to attract investment is the fact that we have a negotiation between labour and capital. That is incredibly important. My point is that we need to build on that resource. We need to expand that resource to have more negotiation between labour and capital and other stakeholders. But then it has to be negotiation. That's the point I'm making. And negotiation is tough. Anybody in this room who's ever been, Chris knows, Moses knows, if you've been in a labour negotiation, it's not just people patting each other on the back, but it's a necessary process. And I think that if we start to build that process, we realize that we do come from different places in the society, we do have our divisions, and the only way that you overcome those divisions is hard bargaining, then I think we will attract investment.
Chris?
Thank you. My closing remarks will be one, that one of the fundamental points that we need to address as a country is to recognize the fact that we're living with two societies in one room. One society is very rich and the other society is very poor. And we cannot live with that for decades. Time is now that actually we look at mechanisms that are actually used by quite a number of countries. For example, the German countries have realized that actually the standard of the society is fragmenting, is going downward. They had to come out with a policy, both government, society and labor, to come out with actually a minimum wage. And the experience says within 5 months, they say to us, actually, the society does confirm that the standard of living is changing. This is exactly that actually we need to go for in our country. Lastly, we are becoming actually a society that is adopting to dark the laws of the country. More special businesses, they are actually fragmenting their businesses so that they will be able to dark the laws of the country. We've got to have a culture of compliance. Thirdly, the Economic Council is a good vehicle. It got to be a model, but we need to strengthen the Bargaining Council to adopt what has been adopted, to strengthen the deliverables that each stakeholder has committed to it.
Moses.
I must defend capital and business. It's not true that many business people in this province and in the country are darking the laws of the country. In fact, if we're to talk about salaries, it must be said that most of the companies are actually complying with salaries that are prescribed in terms of the Labour Act and what the Department of Labour is prescribing. The question that is confronting us as a country is beyond what is prescribed. What is living wage? Hence, you've got strikes, you've got all of these issues that you see. And we do believe that the country is got to begin to look at what do we really could look at each other's eye and say we are paying our people a living wage. And in conclusion, no doubt, if we wanted to take our economic growth levels to 5-6%, we certainly have to create a very efficient domestic competitive manufacturing capacity, and we certainly have to build that potential to export manufactured products. It is key for us as social partners to continue to work together to establish an economic environment that is conducive to economic growth. It is key to us as social partners to continue to work together to attract investment into areas which will stimulate a long-term competitiveness of the South African economy and Africa at large.
Sithembiso.
Thank you. The key word from the civil society is pragmatism, pragmatism, pragmatism. Let's adopt what works and contextualize it to fit our own situation as South Africa. Also, the partnerships should be based and premised on trust. And we are in this thing together. And I share the sentiments by Chris that this is the right vehicle that we've adopted, the Economic Council. It's a matter of saying, how do we move forward through this model that we have developed that can be replicated elsewhere? We are a province that is at work. We've started these negotiations, horse trading, and we'll need more compromises from its social partners. But ultimately, we'll have to put people first instead of the capital.
MEC, a final word, sir.
Well, thank you very much. This has been our first series of debates, roundtable debates, that we will have under the auspices of the KwaZulu-Natal Economic Council, where all of us as social partners will come together over and above the work that we are doing in the council, over and above the economic summit that we convene on an annual basis. We will come here to deepen dialogue. However, what are we taking forward, taking out from here? We're taking out here that first and foremost, for us to continue to grow this economy, to ensure that we are able to respond to unemployment, to poverty, to inequality, we need to ensure that we become an attractive destination, both for your domestic investors as well as for your foreign investors. Secondly, it is important that as one of the 9 action points raised by the President, the issue of industrial stability and the labor market stability becomes crucial. We can resolve issues through bargaining, collective bargaining, and by sitting together, discussing, and therefore reaching consensus based on a win-win. And we must therefore be able to take into cognizance the national imperatives of our stage of development. What is it that each one of us, as we demand of others, that we must also be able to contribute? There can be no economy and no country that can ever progress if all of us are sitting at the level of where we demand and we take and we're not giving back. And therefore, KZN and the Economic Council and our social partners have begun a journey where all of us realize that each of one of us are called upon to give, but each and one of us are also able to take out of what we think is fair for us to take out.
Thank you very much to my esteemed panelists. A round of applause for the robust debate this afternoon. Thank you for joining us for this CNBC Africa Economic Roundtable, coming to you from Durban, KwaZulu-Natal. Until next time.